Greetings. There's an old saying, never get into a business that you don't know how to get out of. Successfully exiting your professional practice is one of the most complex processes of your career. At any given moment, Kleinman Performance Partners has over 50 practice transition projects in process, whether they be succession plans, mergers, acquisitions, or practice sales. These projects are under the direction of McCarthy, our manager of practice transitions. With an MBA in healthcare administration and years of experience working in healthcare consulting and optometry, Megan brings a host of experience and resources to assist you in achieving the highest possible return on your life's work. This week, Megan provides some insight into this important topic.
Hi, as Al said, I'm Megan McCarthy, and with me today is Nicole Harmer. She's our transaction analyst here at Kleinman Performance Partners. We've had the privilege of working with many of our members, but for those of you who aren't familiar with us, our main focus is on all things related to transaction work, such as associate agreements, partnership agreements, mergers, acquisitions, and divestitures.
This includes data collection, financial analysis and projections, as well as contracts, custom tools, and transition support.
Regardless of the type of transaction work that we do, we always start with looking at financial statements. And you would not believe how many different P&L, profit and loss statements, how different they can look. So, why are profit and loss statements so important that it's a foundation of the work we do? And what do they tell us?
Some P&Ls fit onto one page, while others are 4 pages long. Some list expenses in alphabetical order, while others categorize expenses into groups. Some P&Ls show cost of goods, while others do not. No two P&L statements look the same, and depending on how your P&L is structured, some P&Ls don't tell us very much, while others are very well structured and can be a key tool in strategic decision making. For example, you may be able to see your total revenue or net income for tax purposes. But what about your profit? We're talking about your real profit before owner income and owner benefits and perks. What about your expenses? Are you expensing items in categorizes that make sense? For example, how do you classify vendor rebates? Or perhaps you don't at all. Can you tell how much your doctor cost is? Or is it lumped together with staff labor? Has your miscellaneous line item become a dumping ground for your accountant to sort out at the end of the year?
On the other hand, a well-structured P&L can tell you and us a lot about your business. How much you spend on cost of goods, your total staff labor versus your total doctor labor, and separate from all that, your total owner expenses. It can tell you how much is spent on your total occupancy, rent, maintenance, upkeep, repairs, cleaning costs. It allows you to track expenses year over year, which make for more accurate projections, forecasts, and budgets. More so, a thoughtfully categorized and organized P&L statement will not only track your revenue and expenses, but also your net profit before owner income, and even your earnings before interest, taxes, depreciation, and amortization, your EBITDA. That's right, that magical metric that drives practice value.
On our members area, under resources, we have a sample chart of accounts to help you recategorize your expenses, change your layout, and get your P&L statement organized.
So work with your bookkeeper so you can start using your P&L in a more meaningful way, and keep your pulse on not only your revenue and expenses, but on growing your practice value too.